Here are the steps you need to follow if you cannot pay your tax bill. Step number 1, you want to get on a monthly installment plan. So the thing is that if you are behind on your taxes, but know you can catch up eventually, this is probably your most appealing option. So after you file your tax return, you need to fill out an online payment agreement application on the IRS website. And you can also mail in your taxes and include Form 9465, which is used for taxpayers who are interested in a monthly installment plan. And what will happen here is that the IRS will automatically give you 72 months, that's 6 years, to pay your bill, provided you owe $50,000 or less in combined tax, penalties, or an interest. Hopefully, you haven't neglected to file your taxes in previous years. This is why it's always important to file your taxes no matter what. So you cannot get on an installment payment agreement with the IRS until you are caught up on filing past returns. So you want to definitely contact the IRS and get on a payment plan, okay? This is really good. And so the thing is, if you cannot pay the IRS anything, especially if you have been impacted by, let's say, COVID in the last 2 years, then ask them to declare your account temporarily not collectible. And that's it. The label is more or less a placeholder so that the IRS will know your status. Beyond that, it won't help you much, okay? And so what will happen here is that the IRS will still charge you interest and probably late payment penalties. But the thing is, at least you start a conversation, okay? And so you might want to consider this because it will help you actually de-stress. So you'll pay the IRS, let's say the IRS monthly, and maybe your anxiety will diminish. And the only thing that is bad with this is that interest will still accumulate on your account. Even if you have an installment plan in place, interest and penalties will still accrue. And if your debt continues to pile up, the IRS can file a federal tax lien against you and your property. We can make it challenging to get a decent loan. So this is something that you have to think about. The tricky part about paying an installment loan with the IRS, especially if you're self-employed and need to make quarterly tax payments, they have to actually keep up with 2 types of payments. So those are really important, okay? Because you still need to make your quarterly tax payments while also paying your back taxes. So this requires some financial discipline on your part. The second step you can actually take is to request an offer in compromise. By the way, welcome back to the channel. We're having a conversation today about what you can do if you cannot pay your tax bill. So a request, you have to request an offer in compromise, an OIC. Now, this is actually the second approach the IRS recommends if a taxpayer simply cannot pay taxes in full. In a nutshell, you make an offer to the IRS on what you feel that you can pay, and if they accept it, that's what you pay. Now, the IRS does not always accept it, and they don't have to accept it, but at least you try. According to the IRS, an offer in compromise allows you to settle your tax debt for less than the full amount you owe. It may be a legitimate option. And so if you can't pay your full tax liability, or doing so creates a financial hardship for you, and the IRS will consider your unique set of facts and circumstances. So for example, they will look at your ability to pay, your income, your expenses, and your asset equity. In other words, how much you have right now in terms of assets. The IRS generally approves an offer in compromise when the amount offered represents the most they can expect to collect within a reasonable period of time. So the thing is that you always need to explore all other payment options before submitting an offer in compromise. And also worth noting, you must pay a $205 fee when you send your application, though you may be able to get it waived if you meet the agency's low income certification guidelines. And if you owe money though, and you truly believe that you don't owe what the IRS says, you can probably avoid the fee if you submit Form 656L. So this is actually called an offer and compromise doubt as to liability. In other words, you are doubting that you owe that amount, okay? Now, so you might want to consider this option if you don't want to have this problem hanging over your head forever, and it can be a permanent solution to fixing your financial situation, okay? So the thing is, overall, the way we look at it, it's a great option if you owe a lot of cash to the IRS, you have limited assets and limited ability to pay. Paradoxically, the more you owe, the more likely you'll be able to save money with an offer and compromise. Keep in mind that if the IRS thinks you can pay within the statute of limitations, generally 10 years, they will not accept an offer and compromise. Okay, so they actually have to do they have to think about their gain also. The third option that you have is to file and don't pay or make a partial payment. By the way, I want to quickly remind everybody, today's topic is what you can do if you cannot pay your tax bill. So whatever happens, do not become discouraged and not file. You always have to file. Please always file. Whether you expect to do a monthly installment plan or an offer and compromise, you just need time to think about your options. Always file. If you can't pay your taxes in full, for goodness sake, at least send partial payments every month. See, the whole thing is, as I just said, it's all about keeping the conversations with the IRS, keeping things open. Do not ghost them. Do not ignore them. And the first step in not ignoring them is to file. And the second step is to send them something. Send them something. It can be $10, it can be $100, it can be $200. At least you are sending something. Okay? And so let me give you an example. If your tax liability for this year, or for last year rather, is $25,000 and you don't have $25,000, mailing your return on time and send with it a check of $500 or whatever else you can afford. Okay, it's all about showing good faith. And you might want to consider this option if you definitely want to send in your tax return. You can, of course, by the way, file an extension. That doesn't save you money, but it gives you more time to prepare your taxes. Okay, if you fail to send your return in on time, that is an entirely different penalty from failing to pay. And the failure to file is worse than the failure to pay because it is 5% per month until it hits the 25% maximum. By contrast, the failure to pay is only 0.5% per month. Think about that. I want you to really think about the delta here. And if you don't have the money to pay your tax bill, sending in some money every month can reduce penalties down the road, and it will make you look more favorable to the IRS. Okay, and if you later try to work out something with the revenue officer of the IRS, and that officer sees that you have made a payment or even multiple payments, he or she will be in a lot better mood and more interested in working out a formal payment arrangement with you. This is why it's very important to always send something. Okay, so not working anything out will hurt you in the long run. So your tax debt will keep growing, and if you eventually have federal tax liens, that will hurt your credit big time. You will have a relatively small problem snowball into turn a small problem snowball into a big one. You don't want that, and this is why you really want to always send something. Now, if you are still following so far, here is a bonus for you. There are some official IRS alternatives to paying taxes in full or late. Let's dig further here. So the IRS has programs for people who cannot afford to pay their taxes. If you want to take advantage of one of these programs, you will need to submit paperwork and supporting documents to the IRS, or you can actually hire a tax pro to do it for you. A tax pro can help you navigate this process. Here's an overview of your options. So you can there are two options. You can set up a short-term payment extension. So if you need a few months to pay, just request a 120-day 4 months payment agreement. This is similar to setting up an installment agreement, and in that you will accrue interest and penalty charges. However, there is no fee to set it up. You can apply online as long as you owe less than $100,000. That's option number one. Option number two, you can set up an IRS installment agreement. That's what we have been talking about. So basically, if you cannot pay in full, but you can make a payments every month to the IRS, an installment agreement is a great option. An IA, also known as a tax payment plan, lets you pay off your taxes in monthly payments. So there are different plans based on how much you owe and how long you need. So when we talk about IRS installment agreements, there are actually four main options. So you have guaranteed installment agreement. So this is the quickest payment plan to obtain. So this is for taxpayers who owe less than $10,000 and can pay back the entire amount in 3 years. The IRS guarantees it will. The IRS will basically guarantees it. They will guarantee it with a few qualifications to meet. That's for the guaranteed installment agreement. Then you have the streamlined installment agreement. So this is for taxpayers who owe $100,000 or less. It allows you to pay off your taxes owed in up to 84 months. That's 7 years. Okay. And if you owe less than $50,000, you can apply online. Otherwise, you need to call the IRS directly, work with a tax professional, or fill out Form 9465 and mail it to the IRS. And so you also have the financially verified installment agreement. So if you owe $100,000 or more, you probably have to either pay down the balance or verify financial information to obtain an installment agreement above $100,000. To qualify, you have to provide detailed financial statements to the IRS, and the agency wants to verify that you can make payments as scheduled. Okay, and then you have partial payments installment agreement. And if you cannot afford the minimum monthly payments or on an installment agreement that I just spoke about earlier, you may look into a partial payment installment agreement, PPIA. With this resolution, you make monthly IRS payments based on what you can afford to pay. If the taxes owed for a particular tax year are not paid off before the date the IRS can no longer legally collect, in other words, the CSED date, the tax amount owed falls off. So you must submit detailed financial records to qualify. You can also settle taxes with an offer and compromise. I just spoke about that. By the way, boss, in today's topic, we're speaking about what you can do if you cannot pay your tax bill. So an offer and compromise, I just spoke about that. This is basically a tax settlement method where you settle your tax liabilities for less than you owe. To qualify, you need to prove that you will never be able to pay your tax bill or that the assessed tax was incorrect. The IRS is very strict with this option, and it can be very hard to obtain without professional tax help. And the fourth option that I want to talk to you about is called hardship status. In other words, you are trying to obtain hardship status, CNC status. Now, hardship status is when the IRS declares your account uncollectible. To qualify, you must prove that you don't have any resources to cover your tax bill. And the IRS have their own set of guidelines on how much people need to live. And if you have less than the amount the IRS deems necessary for food, clothing, rent, transportation, you may be able to obtain hardship status. In many cases, if you have $25 or less in disposable income per month, the IRS will grant you a CNC status, and this stands for currently not collectible, and it just means that you don't have money to pay for. So the IRS pauses collection actions on your account. And so the thing here is that once you apply, the IRS will review your situation, and if the agency decides to approve a hardship status, it stops all collection activity. It's important to mention that it is a temporary designation. The IRS will revisit your account every year or 2 years, and if your financial situation improves, then you have to pay. Okay, then there are some non-IRS sponsored alternatives to pay taxes in full. Okay, you don't necessarily have to work with the IRS. If you cannot afford to pay your taxes, you may want to explore alternative options. Here are some ideas to consider if you don't qualify for one of the IRS programs, or if you would rather just deal with the situation on your own. So you can borrow from friends and family. Yeah, let's say you have friends and family who are willing to help, or you may want to ask them for a loan to pay your taxes. A personal loan can be especially useful when you need short-term help. For example, if you're expecting a payment from a client, but your taxes are due before that, you may want to borrow from friends and family. Okay, you can also take out a loan. Okay, you can use a loan to cover your tax liability. Just make sure the interest rate is less than the interest rate you will pay with the IRS payment plan. If the interest rate is higher on the loan than with the IRS, you will end up paying more in the long run. So the IRS interest charges range with they actually change with the federal short-term rate. So really, it's important. One option that you may want to consider also is to file for bankruptcy. Now, let me say this. This is a big disclaimer. I'm not asking you to file for bankruptcy in an attempt to evade taxes. Not at all. Not at all. That's not what we're saying here. And bankruptcy should be the last resort. Please, you want to consult a professional financial advisor or a professional tax attorney or an EA enrolled agent or somebody who has the expertise. It can be a lawyer before you do anything that relates to bankruptcy. Do not take it lightly. Very important. Now, one thing I want to say here is that if you are considering bankruptcy before you cannot pay your IRS taxes, you need to find out whether your tax amount is dischargeable by speaking to a bankruptcy attorney. Please always speak to an expert before you make any decision regarding bankruptcy. Very, very important. Bankruptcy negatively impacts your credit score for years, and you cannot always discharge taxes in bankruptcy. The rules vary based on the chapter you are filing, the types of tax, and the age of the tax. Chapter 7 bankruptcy does provide a means to eliminate taxes owed, but qualifications exist and not all taxes qualify. So here are the two most common options. So we talk about Chapter 7 tax bankruptcy. With Chapter 7, you must liquidate all non-essential assets and use the funds to pay down your liabilities. If there are any remaining liabilities owed, the courts will discharge them. Taxes owed can only be discharged if they meet specific criteria or rules. If you are considering this as an option, it is best to speak with a bankruptcy attorney. So besides Chapter 7, we have Chapter 13. So let's talk about Chapter 13, tax bankruptcy. With Chapter 13, you make payments on your liabilities for 3 to 5 years. In some cases, if you have income taxes owed, they are old enough to be considered a non-priority tax obligation, they can be discharged. However, in most cases, the taxes take priority over many other debts when the courts set up your repayment plan. So, long story short, when we speak about bankruptcy, please always consult with a bankruptcy attorney or any other expert, somebody who really understands the implications when it comes to bankruptcy and taxes and as they relate to your specific situation. Let me give you a few pro tips before we actually wrap up this conversation. It's really important to actually think about tax planning. So if you can't pay your taxes, should you hire a tax professional? That's the question, right? So if you are broke and you live in a modest home and are not considered wealthy, probably not. You're going to eventually pay the IRS a lot of money in back taxes, yes. So does it really make sense to also pay a tax attorney when you can talk to the IRS on the phone and sending the forms yourself? So it's just better not to do it if you are broke. On the other hand, for some people, this may be actually a great idea. So the more complex your situation, the more likely that the cost of professional help will be worth it. As a rule of thumb, if you owe less than $50,000, don't own a business, and all you want is a payment plan, then you probably don't need professional help. However, if you decide to pay for professional help, be sure to vet them carefully. Unfortunately, there are a lot of companies out there that will actually promise the moon, take your money, and leave you worse off than you started. Okay, very important. So to review, if you have a tax bill that you cannot pay but you want to come to a solution, do the following: file your taxes whether or not you can pay. Send the IRS some money if possible. It doesn't have to be the full amount. Wait to receive a letter from the IRS about your tax bill, or better yet, contact the IRS and ask them about a monthly installment plan. If you're feeling really overwhelmed, talk to a tax professional about your situation and consider possibly sending in an offer and compromise. Now, people say, well, if you can't pay your taxes, could you go to jail? That's very unlikely. If you were to fill out a fake tax return, something known as tax fraud, you could wind up in serious trouble. If you're not filing taxes for years and years, then you start to get into what's known as tax evasion. You could go to jail for that. But if you are simply unable to pay your taxes, work with the IRS and try to pay something, or hire a tax professional. Okay, and let's talk about state taxes. If you owe state taxes and can't pay, well, you have options too. Most states offer payment plans as well as other tax relief options. So depending on the rules in your state, you may be able to apply for an offer and compromise, get innocent spouse relief, or qualify for hardship status. All of the states with income taxes offer different relief and payment options. So it's really important to work with a tax professional who has an in-depth understanding of the rules in your state. Okay, and if you are facing a hardship, do you have to pay taxes? Some people can get more time to file their taxes, depending on it. It really depends on the hardship, though. Okay, but again, check with an attorney who knows a lot more about your state. Last question here. I really want to talk about. What if you cannot pay taxes and are supposed to file? Well, again, it's all about filing. You always have to file, okay? Many taxpayers find themselves in this situation every year. In most cases, the thought of a tax bill is just so stressful that they ignore the situation and they don't file. In other cases, they think they can't afford to file taxes and draw attention to their unpaid tax liability. So they often think that they will stay under the IRS radar if they don't file, but the opposite is true. The thing is that if you don't file a tax return, the IRS will eventually find you. Remember, your employer, clients that issue 1099s, investment firms, and banks often send income documents to the IRS. And the thing is, when the IRS receives these documents, it will realize that you haven't filed. And this is never, ever, ever a good situation. The thing is, even if you cannot afford to pay your taxes, you should still file a return. The penalty for not filing a return is, think about it, 10 times higher than the penalty for not paying your tax bill. Okay, so this is really important. Let me just put things in context for you. Let's say you owe 10 grand. The non-filing penalty is $500 per month, but the non-payment penalty is only $50 per month. So these penalties are added on every month. So if you are already behind, you should deal with your unfiled returns as quickly as you can. So this is important. Now, at this point, you're probably wondering what happens if you can't pay your taxes after you file a return. Well, this is not an ideal situation, but the IRS has a few options available to help you. We spoke about them in today's conversation. Okay, we spoke about installment plan, offer and compromise. Okay, so this is important. Now, if you can't pay your taxes, again, as I said, the rule of thumb is you want to actually keep the conversations open with the IRS. Very, very important. Don't ghost them. You want to answer them because, again, they have all the tools in place to actually find you eventually. And if they find you at that point, all the penalties and all the interest would have been accruing on your account anyway. So it's better that you be proactive and do things yourself, as opposed to being lethargic and just waiting for the IRS to find you. They will find you. That's for sure. Here is the approach I want you to really actually have. Because when we talk about, let's just say, let me just picture this. You're out there sitting there and you're just wondering, okay, I can't pay my taxes. What do I do? I'm probably contemplating a 10 grand or 5 grand tax bill and I'm broke. What do I do? Step number 1, do not panic. Do not panic. I want you to really relax and take some notes right now. Okay? Remember, you just have to file. File. As I said before, the penalty when it comes to non-filing is much, much, much larger. 10 times as much as the penalty for not paying on time. So file. Do not panic. File. You can use online software or just file manually. At least you have a clear idea of how much you owe. Step number 1, do not panic. File. Step number 2, consider filing an extension. You can file for a 6-month extension on Form 4686, which is almost automatically granted unless you have a bad history with the IRS. That will help you avoid a penalty, but you will still owe interest. You can also negotiate for an installment agreement or even a reduced settlement. So again, you can call 1-800-829-1040 to discuss your options with the IRS. So once you file, even if it's for an extension, you get to the next step, which is what? You want to figure out how to pay the tax man. This is really important. Now, you ideally, you want to think about, as I said before, you can get loans from friends, loans from regular lenders. You can try to save money on your own. You can try to get a side gig, a second job, a third job, anything you can do to actually have the cash that you need to pay the tax man. And the thing is that if you want to avoid future IRS payment dilemmas, it's really important to actually think about having a budget. Okay, there are two things here. You need to have a budget. You need to also track your tax payments, especially your tax payment on time. If you are, let's say, a W-2 employee, then if you're probably, maybe they're not taking enough cash from your paychecks. So you might want to adjust that end. But if you're self-employed, for example, you want to rethink how much you are sending the IRS on a quarterly basis, so that at year end you don't have to owe that much. Very important. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about what you can do if you cannot pay your tax bill. So we spoke about getting on a monthly installment plan, request an offer and compromise, file and don't pay or make a partial payment. And then I actually spoke to you a little bit about setting up a short-term payment extension, setting up an IRS installment agreement, settling taxes with an offer and compromise, obtaining hardship status, borrowing from friends and families, and take out a loan, or in some very extreme cases, considering filing for bankruptcy. But again, anything relating to bankruptcy, you need to consult a professional, a lawyer, somebody who has a clear understanding of the consequences for that type of action. Thank you. God bless you. I'll speak to you another time. Until then, remember, stay marvelous.